Ladies and gentlemen, good day and welcome to the Ola Electric Q1 FY25 earnings conference call. As a reminder, all participant lines will be in the listen-only mode. There will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during this conference, please signal an operator by pressing star and then 0 on your touchtone phone. Please note that this conference is being recorded. I now hand the conference over to Mr. Abhishek Chauhan from Ola Electric. Thank you, and over to you, sir.
Thank you. Ladies and gentlemen, we are pleased to welcome you all to Ola Electric's first earnings call, where we discuss its financial results for the Q1 of the financial year 2025. From Ola's management, today we have Mr. Bhavish Aggarwal, the founder, chairman, and managing director, along with Mr. Harish Abichandani, the chief financial officer. I now hand over the conference to Mr. Bhavish Aggarwal. Thank you, and over to you.
All right. Hello, everybody. This is our first earnings call as a public company, so we're all very excited about sharing updates with all of you. And I'm just looking at the names. Looks like some people that I also know. So good to see all of you. We've released a press release. We put up the statutory financials, and we've also put out a presentation on our website. So I will just walk you through some thematic updates, and then happy to do a Q&A at the end of it. So if you see some key metrics for this quarter, overall this quarter has actually been an important quarter in terms of both growth as well as profitability, as well as some key initiatives that have continued to mature well. Key metrics, if you look at our total income, we had 1,718 crores in this quarter. It's the highest ever, year-on-year about 34% growth. We had a good number of deliveries, 1.25 lakh through the quarter, a 77% growth over last year. Adjusted gross margins were about 21.94%, again about 873 bits higher year-over-year. This quarter also, we had a very good market share performance. Almost 1 in 2 electric two-wheelers sold in India was an Ola vehicle. 48.6%, and our EBITDA margin also, consolidated EBITDA margin, went up to negative 7.6%, about a 660 bps improvement. Now this quarter onwards, and this is the first quarter results that we are publishing. We have also started showing a segment view of our business. There are 2 segments. Obviously, we show the Concall view. We continue to show that, but we have the automotive segment and the cell segment. And we in our discussions with many of you analysts through the process, we realized that people wanted to understand the 2 types of businesses separately. So we decided to share more information with all of you so that you can see the health of each individual business. And I'm actually very happy to share with you the numbers on the automotive segment. If you see the financials, we have made significant EBITDA improvements there, segment EBITDA. Our segment EBITDA is now negative 2%, which is just on the cusp of a positive point. And this has improved, I think, quarter-on-quarter about 7 percentage points. Some key operating highlights. Firstly, on growth. Like I mentioned, we have a strong market share in this quarter, 49%. Market share numbers will move up and down through the next 2 quarters as the industry evolves. But another good sign is our overall volumes continue to grow, our highest ever volumes. And a very important point that I want to share with all of you is while the volumes have grown, we have also grown both the category of products, the premium products and the mass market products. Mass market is roughly what you would think of as sub 1 lakh rupee products. And in our data, we have the data numbers of premium deliveries as well as mass market deliveries. So you'll see the split of that. And you'll see that while our mass market scooters have grown, our premium has also continued to remain steady and actually slightly inch forward. So that's a sign of a deepening penetration in the market. Our mass market products are reaching out to parts of the country, up-country markets, etc., where probably the premium products were slightly costlier for the consumers. It also, like I said, shows a growing industry penetration. If you look at July, which is the latest month, right after this quarter, the numbers are published through the Vahan portal. The e-two-wheeler industry penetration grew to about 7.4% in July. This is across all categories of two-wheelers. And within scooters, the penetration has gone up to 21% in July. So almost higher than 1.5 scooters sold in the country now is electric. And actually, there are 9 key states which include big states like Maharashtra, Karnataka, and UP, where the scooter electric penetration is now upwards of 30%, which is a very important milestone. 1 in 3 vehicles almost is a electric scooter there. And like I mentioned, with our mass market portfolio, we are seeing an early uptick in upcountry tier 3, tier 4 markets also. On the theme of growth, one important point I want to highlight to everybody on this call is that we are launching our motorcycle portfolio tomorrow. Tomorrow is our annual product launch event, 15th August, India's Independence Day. But I would like to share some highlights with all of you today, and remaining will have to see the event tomorrow. But we are launching a portfolio of motorbikes across premium and mass market categories, and these will be available for delivery soon enough within this financial year. So remaining details you will see tomorrow. But this week we believe the next big frontier for EV penetration and EV growth in India is going to be the motorbikes. As many of you would know, motorbikes account for about 2/3 of the Indian two-wheeler market. So it's a very important step that this company is undertaking, and we have a bunch of announcements in more detail lined up for this tomorrow. Now, moving on from the theme of growth into profitability, there are 2 highlights here I would like to give you. The adjusted gross margins of the company have improved both quarter-on-quarter and year-on-year. And this is, by the way, despite a reduction in FAME subsidy in this quarter since actually through the last year. Our gross margins have improved because primarily our Gen 2 platform, which we had announced in August last year, and then through the last 6-8 months, it has ramped up production, with the latest being the S1X products, which came into deliveries only in this quarter, Q1 of FY25. So with the Gen 2, we've been able to reduce our BOM costs, and as a result, you see the improvements in adjusted gross margins. In addition to that, we've also seen an improvement in overall EBITDA margins, almost 670 basis points. And specifically within that, the automotive segment, which is primarily the large part of this company right now, is almost EBITDA breakeven. And we've done this by we've reduced some part of our direct and indirect cost structure beyond the vehicle BOM. And we've also used some technology around AI and digitization to reduce our distribution costs. Moving ahead into some key operating highlights, specifically around the cell, which has been one of the areas of interest for many of you. I'm happy to announce and share that the phase 1A of the Gigafactory was completed by the end of March 2024. And that was 1.4 gigawatt-hour, and now we are producing cells. We've produced more than 30,000 cells since then already, and ramping up month by month. These cells will get integrated into our products by Q1 of FY26, and that is an important milestone because that will help both profitability as well as getting critical mass for our cell Gigafactory to further then in the future expand into adjacencies like energy storage, etc. Another important milestone that we crossed in this quarter for our cell segment was that we received the BIS certification in May. Now, BIS certification is an important milestone in getting the cell production ready and certifying all the key specifications of the cell. You also see in the presentation, if you guys have that, a very nice visual of our cell and some key specs. The fact that it is 5x energy than a 2170 format cell, which we use right now, and most companies use that in their vehicles. We get longer range in this cell vis-a-vis the current 2170 cells. And this IP has been built by this company through its R&D efforts. More than 70 patents have been filed in the engineering and production of this cell. Now, those are some operating highlights. Just to summarize it for all of you, important progress on growth with the best market share, highest volumes, highest revenue, improvements year on year, as well as a very important progress this quarter on profitability due to our Gen 2 platform coming to maturity, S1X launching, that's leading to penetration, and both adjusted gross margins and EBITDA margins reaching to improved levels, and specifically automotive segment EBITDA margins getting to almost breakeven. So with that, I think I will end my remarks. There are in the presentation some financials, consolidated and automotive, which I am not covering, which I will leave for you guys to look at. Now, Harish and I are happy to answer any questions you have.
Thank you very much. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and one on their touchtone telephone. If you wish to withdraw yourself from the question queue, you may press star and two. Participants are requested to please use handsets while asking a question. Ladies and gentlemen, we will now wait for a moment while the question queue assembles. The first question is from the line of Chandramouli Muthiah from Goldman Sachs. Please go ahead. Chandramouli, the line for you has been unmuted. You may proceed with your question. As there's no response from the current participant, we will move to the next question, which will be from the line of Gunjan from Bank of America. Please go ahead.
Yeah, hi. Thanks, team, for taking my questions, and congratulations on the listing. I also you should mention that it's good to have the segmental reporting. This is something that was very much on top of our mind, because otherwise we can't assess the difference between the auto and the battery business profitability. So it's nice to have that, and I hope that continues through. Now, two questions. Firstly, on the margin side, could you also help us understand how does the gross margin profile stand when the subsidies, X of subsidies, both PLI as well as EMPS?
Sure, Gunjan. Good to have you here, Gunjan, and we will definitely, our goal with providing these segmented financials is so that all of you can understand the business in more granularity. And as you can see, the automotive business is actually obviously in a decent shape. Now, on the margin, if you think of the two subsidies, one is FAME and one is auto PLI. We don't yet approve anything from the cell PLI, which is the other PLI we are part of. The FAME subsidy is about 10,000 rupees a vehicle, maybe 1,000 rupees here and there for this quarter, given that this quarter was the changeover from FAME to EMPS, and there was some old backlog, maybe 11,000 or so. That's where it would be. So that would be about 8 to 10 points of margin there, right? And then PLI, we are recognizing right now for our S1 Pro and Air, not S1X. So what we recognize there, whichever product gets it, I think Harish will estimate about 13% of it. So you will assume maybe on 50-55% of revenue, you'll get 13%.
Okay. So fair to assume that, roughly around 14%, so 8%, maybe 8 to 10% on the EMPS, and another 6-7% on the PLI would have accrued in this quarter?
Yes.
Okay.
Yeah, I think actually those are reasons.
Okay, got it. And from here on, if I just think about the margin trajectory, what are the other cost levers, from the next 12 to 18 months perspective, what can really kick in terms of either cost savings or particularly at a time you will also have the bikes kicking in, right? So how do we think about the roadmap of the margins with new product kicking in, and anything that you can share in terms of cost improvements yet to kick in?
Sure. On the bike specifically, Gunjan, the bike is built on the same platform as the scooter, which is the Gen 2 platform. So all the key aggregates like electronics and motor and the cell manufacturing processes, etc., all are same. So the supply chains are all the same. Hence, the bike starting point will be where the scooter current point is. Right. So even on the manufacturing side, there is no real incremental capex installation unless we have to increase capacity, where we are at about 1 million units installed capacity right now. There will be some small capex here and there, but the major capex will be only for capacity increase because the same, largely the same platform. So the bike will start from a similar cost structure on the BOM cost. The pricing we will see tomorrow, so that is the other part of the gross margin equation. On the roadmap of gross margin improvements, there are 2 or 3 important themes here which I want to highlight. Firstly, the big mover on gross margin will be the cell, which will be, like I said, Q1 of FY26, which is about, let's say, 9 months away, 8-9 months away. That's when a big change in the gross margins will happen, because that's the next big piece of our vertical integration strategy. Till then, there are a few other incremental things on BOM costs which are reducing through a mix of negotiations with suppliers, different supplier mix, co-location of suppliers into our EV park, which reduces the cost of supply to us, etc., etc. So through a lot of these activities, the cost keeps coming down incrementally from here to there. And then at that point, there's a big change which happens with our own set.
Okay, got it. Just last question on the battery side. 1,300 is total money that you've invested. How should sorry, I'm not sure if my voice is echoing, but maybe I'll just repeat the question. On the battery investment, if you can just call out, how do we see the investment panning out? 1,300 done, how much more, and how phased will it be? Some thoughts around that.
Yeah, hi, Gunjan. Harish here. On the cell side, you will see the segment assets in the regulatory reporting, so that's got covered there. Now, going ahead, which is a phase 1B, is under implementation, which will take us from 1.4 to 5 gigawatt of cumulative capacity. In that context, the amount that will get invested, already invested part of it on the term loan on that phase will get complete. So around another, we have invested almost 400 to 500 crores in that phase. The remaining money will get invested. And post that, for phase 2A, what we have raised in the IPO, which will take it from 5 to 6.4, so that the 1,200 odd crores which you have raised in the IPO will be invested in that. And that will obviously be leveraged for further project finance to take it to 10 and beyond.
Okay, got it. I'll join back the queue. Thank you so much.
Thank you. The next question is from the line of Rishi Vora from Kotak Securities. Please go ahead.
Hi team. Thank you for taking my question and congratulations on the IPO. Just first thing I wanted to understand, I don't know whether you shared it, I joined it a little late, but what would be the mix between premium and mass mass scooters during the current quarter as well as the last quarter, just directionally how it has moved?
Rishi, if you see, if you have the presentation that we've shared, you will see that in the automotive financials page, you will see the deliveries across premium and mass. So as you can see, premium is still fairly, so out of the 1.25 lakhs, 75,000 was premium and about 49,000 or 50,000 was mass. So premium is actually holding well and mass is continuing to grow. Last quarter, the premium was about 65,000. Mass was also 49,000. So while mass segment looks flat quarter on quarter, I want to share with you that the deliveries in Q4 FY24 were from the order backlog of Q3, because Q3 is when we launched our mass product. So you should assume that on average half of that. So mass products have grown in terms of orders, etc. into Q1.
Understood. And how has been the acceptance of Ola S1X given the price point at which it is being launched? And given your mass market motorcycle launch in the coming quarters, how do you think the trajectory of electrification will happen within the motorcycle segment? Or do you think will it follow a similar trajectory as scooters, or will it be a faster adoption given the learning curve from the electrification in the scooter segment?
So this is the first part we had actually answered in my opening comments, but just to give you a headline, we've seen that mass market products have increased penetration and have largely not cannibalized our premium products. Obviously, there will be some internal cannibalization here and there, but premium has also incrementally grown and mass has added on top of it. So mass products are doing well in upcountry markets, even in urban areas, but it has helped us grow deeper into the country, the S1X product portfolio, 2 kWh, 3 kWh, 4 kWh. Now moving to motorbikes. Motorbikes are built on the same platform, so the cost structure is the same, and you can directionally expect similar pricing from us for a similar eventual margin that we see in the automotive segment today. We will have to obviously see how the market responds, but we feel confident that motorcycles will have, because it's 2/3 of the overall two-wheeler market in India, so it's a bigger market to tap into. And specifically, the mass market segment in motorbikes is also fairly utilitarian. People buy ICE motorbikes for their cost, not really for at that price point. And maybe at a higher price point, people might buy motorbikes for other brand reasons, but at the mass segment, people buy it largely for utility and cost. And that's where I believe the EV proposition of lower cost of ownership also will cut through. I think eventually we have to see how fast the market grows. But another good thing is now compared to 3 years ago when the EV scooters were just new, now the overall market of two-wheeler consideration customers is also being educated fairly well about electric. And as we bring in motorbikes, I believe that kind of education will help with a certain accelerated ramp.
Understood. And just last bit on the other expenses, just on a sequential basis, despite uptick in volumes, other expenses are down 12%. So, like, what has driven that decline? Any cost, like some cost, fixed cost has come down. Anything which you like to highlight?
So, I'm supposing you're referring to operating expenses in the Concall financials. So that is, there is some level of just streamlining using technology that we have done on the distribution side. We've also cut down some inefficient stores, but we might be adding that back as we add more products out there. But largely, it's a continuation of just streamlining of operations using technology. That's the one main theme I would leave you with on operating expenses.
Understood. Thank you so much, and all the best.
Thank you. The next question is from the line of Chandramouli Muthiah from Goldman Sachs. Please go ahead.
Hi, team. Can you hear me better this time?
So you
Hi, Chandra. Yes.
Hi. Good evening, and thank you for taking my questions, and congratulations on the IPO. My first question is just around your longer-term vision on where you see electric two-wheeler sales penetration in India over the next few years. And also related to that, what you think the industry...
Sure. Shall I answer that, Chandra?
Sure. Please go ahead.
Yeah. So, Chandra, I think that's an important question. Many people on this call might not have heard us in our roadshows, etc. So, actually, if you look at ICE versus EV, there are multiple opinions, and since it's a new domain for India, largely 3-year-old only, there's a very important, almost like a law of physics level of a fact, that ICE vehicles keep getting costly because of emissions compliance, and ICE fuel, which is petroleum or gasoline derivatives, also keep getting expensive due to macro factors. Whereas EVs will keep getting cheaper cost because of battery prices continuing to reduce through technology and supply chain innovations and scale. And electricity also, actually, our Prime Minister, Honorable Prime Minister, has a vision of making electricity free with his solar rooftop. So, while that's one scheme, generally electricity will be fairly available and affordable as we go ahead, right? So EVs are only going to get cheaper to buy and cheaper to use. Vis-a-vis ICE vehicles, they're only going to get costlier to buy and costlier to use. So this story only ends one way. Question is when and who will be the protagonist in this journey, and we hope we are well positioned to be that. But specifically within India, these are more just technological macro themes. So within India, the story for electrification, the main focus area is the two-wheeler ecosystem. Like that's where we started our journey from 3 years ago. And scooters is where we have a good portfolio now, and motorbikes is where we are putting our next sight on, and we'll see very good announcements tomorrow on that. So we believe, I wouldn't want to hazard a guess on timelines, but generally the penetration journey will continue with more products being announced. The cost of products continuing to come lower, and generally consumer confidence in this new technology increasing. And we are seeing that already anecdotally. There are people who are buying their second, third electric scooter with Ola. There are people who are, a lot of our, a reasonable amount of our sales come through customer referrals. So that word of mouth is strong. And as you guys know, we generally don't do much advertising. So a lot of our sales is actually just word of mouth and organic.
Got it. That's helpful. And just as a follow-up related to that, you have been a very fast growth company over the past 3 years. And as you project out where you think electric two-wheeler sales penetration can be, what are the sort of volume growth targets that you set for yourself? What are the sort of volume growth run rates you think the industry can do during the next 4 to 5 years when the industry has the tailwind of PLI subsidies?
If you look at penetration right now, scooters is about 20% in the previous month. And I believe that is now going to sustain and grow from here. As other competitors have also launched their sub 1 lakh rupee products, whether they make money or not on that is for them to figure. But as they launch, as we launch our products, as we also, tomorrow you'll see more products from us. With more products available for consumers, the consideration for EVs is only going up. And penetration overall 7.5%, scooters 20%. Maybe in 3-4 years this can be, in 25, 30, 35%. Again, I don't know. The market will play out, but that's the general direction. And the reason I feel confident of that is because two-wheelers in India are a mass Aam Aadmi product, and the lower cost of ownership is a very important proposition. And as consumers become comfortable with it, more and more people are adopting it. Now, our share in that, the market share is an outcome of multiple factors. Our focus is on obviously leading this journey as we have over the last 3 years. We want to focus on getting good products out in the market, being the leaders in getting good products out in the market, a vertically integrated manufacturing strategy so that we are able to make margins and price them well for consumers in an broadly accessible way. Competition might be, they might play pricing, they might want to play their margins. That's up to them. But we believe we have a very strong competitive advantage coming into this because of our tech, our vertically integrated manufacturing, and our existing strong leadership.
Got it. That's helpful. And lastly, just a question on other income for Harish. Just trying to understand, as part of the other income, if you could give us sort of a split between what is sort of PLI incentives in the other income you reported this quarter and what is sort of investment yields?
So if you look at the segment results, you find the other income. Actually, PLI is the account as part of the total revenue itself. So PLI is not part of other income. PLI is reported and accounted on the total income. Other income has got a set of ancillary income, service income, etc. But PLI as an accounting policy and acceptable policy for that is part of the total income itself, revenue itself.
Got it. So just as a follow-up, so within other income, is it largely investment yields or is there any other sort of operational items in there?
So other income would include all the ancillary income, service income, handling, etc. This is all be part of the various other components of the income. The treasury income, of course, will also be there, but that's obvious from the numbers you can figure out. But it's largely the ancillary related product income in that.
Got it. That's clear. Thank you very much and all the best.
Thank you. The next question is from the line of Kapil Singh from Nomura. Please go ahead.
Hi, good evening. Thank you for taking my question. Wanted to check on the gross margin improvement that we have seen. Could you elaborate a little bit more that what has caused this and are there more actions underway which could keep driving this, let's say between 4Q and 1Q? And is there any contribution differential between the subsidies that you got in 4Q and 1Q? If you could just call out that also, that what was the subsidy element in 4Q?
So let me answer the first part, Kapil. See, on gross margin, The main contribution between the last quarter, this quarter, which has been going on for the last 2-3 quarters, is the Gen 2 platform rollout. We started with the premium products late last calendar year, and then this calendar year, especially